Hey everyone, welcome back to Success Blueprints. Today we're diving into advanced crypto day trading strategies to help you maximize gains and minimize losses. We're talking about techniques the pros use to make serious money in the crypto market. Day trading isn't for the faint of heart. It's fast-paced, stressful, and requires a solid understanding of the markets. But with the right strategies and mindset, it can be incredibly rewarding. So, if you're ready to take your trading to the next level, buckle up and let's dive in. First things first. If you haven't watched our beginner's guide on crypto day trading, check it out. Day trading is all about making multiple trades within a single day to capitalize on short-term market movements. We're talking minutes, even seconds, where you can exploit tiny price fluctuations to make a profit. In day trading, you're not looking for long-term holds. You're looking for quick wins that add up over time. Day trading requires focus, discipline, and a deep understanding of technical analysis. You need to read charts, identify trends, and make quick decisions based on real-time market data. In this video, I'm going to break down 3 advanced strategies that can take your trading to the next level. Stick around because things are about to get interesting. Let's kick things off with our first advanced strategy, scalping. Scalping is all about speed and precision, making quick trades to capitalize on tiny price movements. Scalpers aim to make a profit off of small price gaps created by order flows or other market inefficiencies. They might make dozens, even hundreds of trades in a single day, riding those tiny price waves and cashing out quickly. Scalping requires a certain personality. You need to be comfortable with high-frequency trading and managing your emotions under pressure. First, you need a trading platform that offers real-time data and lightning-fast execution speeds. Second, master technical indicators like moving averages, Bollinger Bands, and the relative strength index, RSI. Finally, never forget about risk management. Set strict stop-loss orders on every trade to protect your capital. Let's move on to our second advanced strategy, breakout trading. This strategy is particularly popular among traders who thrive on volatility and quick market movements. Breakout trading is all about identifying assets that are breaking out of established patterns, like resistance and support levels. These levels act as psychological barriers for traders. Imagine a stock that's been trading within a tight range for a while. Suddenly, it breaks through the ceiling with increased volume and momentum. This breakout can signal a new trend. Breakout traders aim to catch these moves early and ride the wave as the price surges upward. The key is to enter the trade at the right moment to maximize gains. Identifying a genuine breakout is crucial. False breakouts can lead to significant losses if not managed properly. Look for breakouts accompanied by high trading volume. High volume indicates strong interest and can confirm the breakout's validity. Another key element is understanding support and resistance levels, price points where an asset has historically struggled to break through. These levels can provide valuable insights into potential breakout points. When a price breaks through a significant resistance level with volume, it often signals a shift in sentiment. This shift can lead to substantial price movements. Like any trading strategy, breakout trading comes with risks. False breakouts and market reversals can occur, leading to potential losses. Set stop-loss orders below the breakout point to limit potential losses. This helps protect your capital and manage risk effectively. Breakout trading can be exciting and profitable, but it requires patience, discipline, and a keen eye for identifying explosive moves. Staying informed and vigilant is key to success. By mastering breakout trading, you can capitalize on some of the biggest moves in the market. With practice and experience, you can develop a keen sense for spotting these opportunities and making the most of them. Now, let's get a little more technical with our third advanced strategy, the RSI Divergence play. This strategy uses the Relative Strength Index, RSI, to identify potential trend reversals. The RSI measures the strength and weakness of price movements on a scale of 0 to 100. Traders use the RSI to identify potential buying and selling opportunities based on overbought and oversold conditions. Sometimes the price of an asset and its RSI will move in opposite directions, signaling a potential trend reversal. For example, if the price of Bitcoin is making higher highs but the RSI is making lower highs, it suggests that the upward momentum is weakening. The RSI divergence play is a powerful tool for anticipating potential trend reversals and making trades based on those insights. We've covered 3 powerful advanced trading strategies, but there's one crucial element we need to discuss: risk management. Without proper risk management, even the best strategies can lead to significant losses. Risk management is the backbone of successful trading. Protecting your capital is just as important as making profits. In fact, it's the foundation upon which all successful trading is built. Start by understanding your risk tolerance. How much are you willing to lose on a single trade? Knowing this helps you set realistic goals and limits. One effective risk management tool is setting stop-loss orders, which automatically sell your asset when it reaches a certain price. This helps you avoid emotional decision-making during market volatility. Another crucial aspect is position sizing. Diversify your portfolio across multiple assets and never risk more than 1 to 2% of your trading capital on a single trade. This way, a single loss won't wipe out your entire account. Trading is a marathon, not a sprint. It's about making consistent gains over time while managing your risk effectively. Patience and discipline are key. By implementing sound risk management strategies, you can protect your capital and come out ahead in the long run. This includes regular reviews and adjustments to your strategies as market conditions change. Remember, trading smart is the key to long-term success. Stay informed, stay disciplined, and always prioritize risk management in your trading journey. Now that we've covered some advanced strategies and the importance of risk management, let's talk about common pitfalls to avoid. These are mistakes that even experienced traders can fall into if they're not careful. First and foremost, emotions are the biggest enemy of any trader. They can be incredibly powerful and can easily override logical thinking. Fear and greed can cloud your judgment and lead to poor decision making. When the market is volatile, these emotions can become even more pronounced. One common emotional trap is chasing losses, trying to make up for a losing trade by immediately jumping into another trade without proper analysis. This often leads to even bigger losses. Another pitfall is FOMO, the fear of missing out. This can cause traders to enter trades based on hype or rumors rather than solid analysis. Making impulsive decisions based on hype can be costly. It's important to remember that not every opportunity is worth taking. The key to avoiding these traps is to have a trading plan and stick to it. A well thought out plan can help you stay focused and disciplined. Outline your entry and exit points, risk management strategy, and profit targets. This will give you a clear roadmap to follow. Take breaks regularly to clear your head and come back refreshed. This can help you maintain a balanced perspective and avoid making rash decisions. By staying disciplined and following your plan, you can avoid common pitfalls and improve your trading success. Remember, trading is a marathon, not a sprint. Patience and consistency are key. So there you have it. 3 advanced day trading strategies and some crucial tips to up your game. What do you think? Will you try scalping, breakouts, or the RSI Divergence play first? Let me know in the comments below. If you found this video helpful, smash that like button and share it with a friend who's ready to level up their trading game. Don't forget to subscribe for more videos on personal finance, investing, and building wealth. Remember, knowledge is power, and the more you learn about trading, the better equipped you'll be to navigate the markets and achieve your financial goals. Until next time, keep learning, keep growing, and keep trading smart.